Hello, crypto investors. In this video, we will do a market update, talk about ADA Cardano, finance, and of course Bitcoin. Stay until the end and you will be fully informed about what is happening in the market today and how Bitcoin is pulling all the currencies after it. If Bitcoin goes up and the other currencies will go up, if Bitcoin goes down and the other cryptocurrencies will go down. If you find this video interesting, give the site a like so that others like you can receive this information. Let's start with Bitcoin. Bitcoin price taps $21.03 ahead of Fed Chair Powell Jackson Hole speech. Daily lows greet Bitcoin traders as markets await fresh macro cues from the Fed. Bitcoin fell to daily lows on August 26 as market nerves heightened into new macro triggers. Pre-Fed blues hit BTC markets. Data from Cointelegraph Markets Pro and TradingView showed BTC dipping to $21,332 on Bitstamp ahead of fresh commentary from Jerome Powell, chair of the United States Federal Reserve. Part of the Fed's Jackson Hole annual symposium, Powell was set to deliver a speech on the day that spectators hoped would provide new cues on economic policy going forward. With U.S. Consumer Price Index inflation slowing since June, interest remained high over the extent of key interest rate hikes in September. Summarizing the current economic situation in the U.S., macro analyst David Hunter argued that the Fed would have no choice but to change course before the end of the year. Many signs were in recession economy continuing to decelerate, he told Twitter follows this week. Composite PMI at 45, housing rolling over fast, retail is weak, labor conditions are deteriorating, overseas is even worse, and inflation is rolling over and likely will surprise on the downside. Fed will pause this fall. According to CME Group's Fed Watch tool, however, a majority still favored a repeat of July's 75 basis point raise. Trading range endures. Bitcoin circles meanwhile kept an eye on potential volatility going into this year's Jackson Hole. We often see an increase in volatility just before Fed announcements, but that may be limited if some of the near-range liquidity doesn't get cleared out. On-chain analytics resource Material Indicators wrote in part of comments on the day. An accompanying chart showed buy and sell levels on the Binance order book, these strengthening closer to spot at the time of writing, reducing the potential for a breakout. Continuing, Keith Allen nonetheless predicted that an end to the sideways price action of recent days would have to enter. Powell will be forced to make a directional move out of the microstructure very soon, he explained. Normally I would be eager to scalp the volatility that usually front-runs a JPAP conference, but the R ratio in the active range sucks. Might consider scalping the breakout of the 50 MA. On the topic of price targets, Cointelegraph contributor Michael van der Paap flagged $21,000 as a key level to hold in the event of additional downside. Retesting $21,800, on the other hand, could result in a breakout of $23,000. Good! Now let's make a comparison between Bitcoin Lightning Network vs Visa and Mastercard. How do they stack up? Bitcoin's Lightning Network has been growing at a slow pace. What's keeping it behind, given its high transaction throughput? Bitcoin changed the world as a decentralized, non-governmental form of currency that can facilitate peer-to-peer transactions that transcend national borders. But despite this functionality, Bitcoin's role as a payment mechanism has been called into question due to its low transaction throughput. The Bitcoin blockchain can handle up to 7 transactions per second, which means that network demand has seen the average transaction fee on the network reach an all-time high of $62 during specific periods. In order to address low throughput and high transaction fees, developers made the Lightning Network a Layer 2 scaling solution that allows for off-chain transactions. The Lightning Network creates a P2 payment channel between two parties in a transaction. The channel allows them to send an unlimited amount of transactions that are nearly instant as well as inexpensive. It acts as its own little ledger for users to pay for even smaller goods and services such as coffee without affecting the Bitcoin network. Users of the network lock in a certain amount of Bitcoin in order to create a channel. Once the BTC is locked, recipients can invoice amounts as they need. To a certain extent, the network is seen as a solution to Bitcoin's scalability problem, but its adoption has been somewhat slow. The network currently has 87,000 payment channels and 4,570 BTC locked in, worth over $111 million, compared to the 19.1 million BTC in circulation, the market capitalization of which is over $460 billion. Despite its slow adoption, the network has the potential to outcompete existing payment solutions. Lightning Network's transaction throughput, payments giants like Visa and Mastercard are used to process payments worldwide. Mastercard's network is estimated to process up to 5,000 transactions per second, making it far superior to Bitcoin's 7 per second. Visa's transaction throughput is even more impressive, being able to process up to 24,000 transactions per second. In a recent interview, Visa Chief Financial Officer Vasant Prabhu said that the network could, in theory, handle up to 65,000 transactions per second. The Lightning Network goes much further, however, processing up to 1 million transactions per second, making it the most efficient payment system in the world in terms of transaction throughput. Cointelegraph reporter Joseph Hall does an impromptu test of the Lightning Network versus fiat contactless payments. Speaking to Cointelegraph, Ovidiu Carodia, CEO of Romanian cryptocurrency exchange Coinzix, noted that the network marks the next phase in the evolution of money. Per Carodia, first, there was gold, which was a store of value but wasn't a convenient medium of exchange, with fiat currency following up as a convenient medium of exchange. Bitcoin, Carodia said, was an evolutionary step that created a new store of value, with the Lightning Network serving as a platform for it to also become a medium of exchange. VC's charging businesses around 3% to process payments, so I think the Lightning Network is a game changer. Companies will increase their revenue by using it, and that's not something that you can ignore. He noted, however, that the network scalability isn't so great, as users need to open a channel with each party and tie up BTC on it, which affects their liquidity. Per his words, tying up liquidity can be avoided by using other routes and other payment channels, but the solution isn't very scalable, as payments channels keep opening and closing. Thomas Perfumo, head of business operations and strategy at crypto exchange Kraken, told Cointelegraph that since the firm launched Lightning Network support in April 2022, it has steadily increased network capacity to the point that it's now the fifth largest node on the Lightning Network. We currently have over 800 open channels that can facilitate upward of 18 billion Satoshis worth of payments. Clients are routinely funding their accounts via the Lightning Network on a daily basis. Perfumo added that the exchange sees the Lightning Network as essential for the creation of a permissionless payment system that will ultimately help accelerate the adoption of cryptocurrencies worldwide. While the Lightning Network's advantages in terms of transaction throughput are now clear, it has some notable downsides. Firstly, opening up a Lightning wallet and funding it may not be as easy or as ingrained as opening a bank account and using a debit card. Furthermore, funding a Lightning Network wallet requires users to send BTC from a traditional Bitcoin wallet, and creating a payment channel involves locking up funds. Once funds are locked into a payment channel, they can freely transact, but the funds can only be recovered after that channel is closed. Moreover, offline transaction scams are possible, as one party may close a channel when the other is offline to try to steal funds. While third-party services may mitigate the risk, it keeps them from entering the network. Privacy, ease of use, and censorship resistance. Keeping these disadvantages in mind, Max Rothman, head of crypto and digital assets at global payment processor Checkout.com, told Cointelegraph that being able to use cryptocurrencies to exchange goods and services is only effective when crypto can seamlessly exchange hands. The Lightning Network being peer-to-peer, Rothman added, puts the responsibility for the transactions process on both merchants and customers. On an institutional level, this can be challenging and resource-intensive to administer in-house without a trusted partner to manage thousands or millions of cross-currency transactions. Rothman said that solutions like the one used by Checkout.com, which rely on partner companies like Visa to offer on-ramps that allow for crypto to fiat conversions, are the bridge that offers a more seamless translation experience between Web2 and Web3. Onboarding the next million or billion people to crypto requires guidance, support, and bespoke solutions that work for every level of payment needs and acknowledge the current payments environment in which we operate, he stated. Speaking to Cointelegraph, Bruce Fenton, a board member at the Bitcoin Foundation and a candidate with the United States Senate in New Hampshire, said the Lightning Network enables Bitcoin to do more transactions while being more decentralized and censorship-resistant than centralized companies or most other chains. When asked about the pros and cons of using the Lightning Network over solutions from companies like Visa, Fenton dismissed Visa's entirely centralized, which means it can be stopped or censored. While centralization may be a concern on the Lightning Network for some, he said that it does not affect the Bitcoin blockchain itself and added, it's mostly about what money you are building on and for. For those who believe in Bitcoin as the superior money, LN is the most well-known scaling solution. Chet Barraford, technical lead at decentralized liquidity protocol THORchain, told Cointelegraph that when checking out at online stores, the Lightning Network enables a cash option, in which there is no other party participating, no exorbitant fees, and substantial privacy benefits. He said that the network is not solely motivated by the best interests of shareholders or board members but serves its participants' interests as a public good, adding, Visa is a financial institution that inherently seeks profit and control and is at the behest of governments. The Lightning Network is purely a public good. It only exists to provide a fundamental and critical service for every person on the planet in need of access to financial services. The Lightning Network's adoption and success are tightly coupled with the Bitcoin network itself. Barraford stated. He believes that as the world sees BTC less as a speculative asset and more like a currency to purchase items, then inflationary pressures will push more and more people to the Lightning Network. While the comparison against networks like that of Visa or Mastercard is clear from these answers, it's worth pointing out that some of these arguments apply to other solutions such as PayPal, which can be forced to freeze customers' assets or charge higher fees. For example, blockchain technology has been developing over time to the point that other blockchains are also able to compete with Visa's transaction throughput without seeking to profit from it. What about other chains? Speaking to Cointelegraph, Fenton hinted that the Lightning Network stands out as more decentralized and censorship-resistant than most other blockchains. DECT co-founder and project lead Jake Yarkempai built on that idea, telling Cointelegraph that other blockchains are unable to match the Lightning Network's qualities. Yarkempai claimed that the high-throughput blockchain Solana, with a theoretical throughput of 710,000 transactions per second, is a centralized, non-custodial blockchain that requires its validating nodes run in data centers on high-end hardware. Comparing the Lightning Network, Solana, and DECT itself, he said, of these three, Lightning Network is the most decentralized, sovereign, and most aligned with the original ethos of the cryptocurrency space. Solana sacrifices most of its decentralization via its onerous validating node requirements, but at least it does not appear to be able to censor users and merchants arbitrarily. Whatever the future holds, it's clear that innovation in the cryptocurrency space is increasing transaction throughput. Whether users will end up choosing to sacrifice privacy and immutability for more convenience remains to be seen. As it stands, more convenient solutions are available. It's now easier to use Layer 1 blockchains for payments via centralized entities that allow crypto assets to be converted to fiat currencies at the point of sale. For the Lightning Network to gain a wider audience, more services are likely going to have to support it. Leading exchanges like Coinbase, Binance, and FTX haven't followed the footsteps of other exchanges in embracing the network, hindering its growth. As the network relies on having more payment channels to keep routing transactions, other networks and centralized payment providers are likely to stay ahead. I hope that this article has convinced you of the difference and importance of these payment or value transfer systems. Let's continue with ADA Cardano. Cardano hard fork Everclose has upgraded SPO account for 42% of blocks. IPE wants to see at least 75% of new blocks coming from upgraded nodes, along with two other critical indicators before implementing the Vassal hard fork. Input Abraham Khan, IOC, the blockchain company behind the Cardano network, says the much-anticipated Vassal hard fork is ever closer after revealing the state of three critical indicators that will trigger the mainnet update. In a Twitter thread posted on Or25, IOC shared its latest rollout status of the Vassal upgrade to its 265,800 follows, with updates on three critical mass indicators which will determine when the mainnet update will go ahead. This includes having 75% of mainnet blocks produced by nodes running 1.35 free, around 25 exchanges upgraded, representing 80% of liquidity, as well as the top 10 key mainnet apps also having upgraded. On Thursday, the blockchain company noted that stake pool operators, SPO running the latest node 1.35 free now account for 42% of mainnet block production in the current epoch, which is now more than halfway to the 75% required. IOC also noted that one of the world's largest exchanges, Binance, has reportedly upgraded their Cardano nodes to the latest version. The firm has been targeting roughly 25 exchanges to upgrade their nodes, as it would account for approximately 80% of its native tokens' total liquidity. Regarding its mainnet decentralized applications, dApps, IOC confirmed that they'll continue to stay close to many of the dApp teams on Cardano, with 4 out of 10 already confirming they are actively testing against Node 1.35 free on the pre-production testnet. IOC also shared that no new bugs have been identified, leaving 9 minor bugs still to be dealt with, none of which will cause an unintended hard fork. The long-awaited Vassal upgrade is aimed at reducing transaction size and allowing for more network activity while lowering costs, after a roadmap was released by IOC on May 19 which planned for a hard fork on Jan 29. The Vassal upgrade has been plagued by delays while developers ensure the network transition proceeds smoothly. Charles Hoskinson, co-founder of Cardano, recently responded to criticism about the upgrade being rushed. He suggested that they could delay the launch for months to retest the code which has already been tested and running. But the dApp developers would not see this as worthwhile given they have waited so long already. I'm very interested in your opinion about ADA Cardano. How do you see this project in the present and how do you see it in the future? Leave your opinion in the comments. Let's continue with BNB. 3 reasons why Binance Chain. BNB rallied 66% since the crypto market crashed. BNB token holds a $50 billion market cap and has rallied 66% since the crypto market crashed. But what is behind the altcoin's tremendous recovery? BNB, the native token of Binance's BNB chain, has bounced 66% from its $183 low in mid-June. The move consolidates its position as the third-ranked cryptocurrency when stablecoin market caps are removed and reflects a $50 billion market capitalization. BNB has outperformed the broader altcoin market capitalization after a devastating 73% correction that began in November 2021. The above chart displays how this smart contract blockchain network suffered during the recent market collapse and how similar movements happened across the altcoin market. Now that BNB price has reached $300, let's take a look at how the asset is positioned compared to July 2021 when it traded for the same price. Is BNB market cap and valuation justified? Back in July 2021, the altcoin market capitalization stood 21% higher at $740 billion. Bitcoin, BTC and Ether, ETH had already established themselves as the market leaders, but the dispute for the third position was far from settled, at least in terms of the total value. Despite still being the third largest cryptocurrency, BNB market cap was $47 billion, while Cardano, ADA held a $46 billion valuation. Currently, no altcoin remotely matches its dominance and the gap has widened by more than $30 billion. Smart contracts form the foundation of all decentralized applications, DApps, including decentralized finance, gaming, marketplaces, social networks and many other use cases. So what other success metrics are there besides the number of active users using addresses as a proxy? PancakeSwap, BNB Chain's decentralized exchange, has 1.98 million active addresses. The number is so massive that aggregating the next four competitors is not enough to match it. According to the data, the runner-up to BNB Chain is 1inch Network, which holds 91% fewer users. For those questioning whether BNB Chain is a one-trick pony, the network holds a couple of games that have 83,000 or more active addresses each and 78,450 that use the 1inch network. Asking whether PancakeSwap really holds that many users is a valid question, but the Ethereum network only holds 3 DApps surpassing 30,000 active addresses, namely Uniswap, OpenSea and MetaMask Swap. Smart contract deposits set BNB Chain apart from its competitors. One might argue that the total value of users' deposits in smart contracts are critical to determining a network's success. However, while it is highly valid for finance applications, there's not much reason for marketplaces, games, collectibles and social networks to hold large deposits. Currently, Ethereum is the absolute leader and the DApp hosting the algorithmic-backed AI stablecoin has $8.25 billion worth of deposits. Currently, Ethereum is the absolute leader and the DApp hosting the algorithmic-backed AI stablecoin has $8.25 billion worth of deposits. Still, this is more than justified by Ether's $208 billion market capitalization, which is over 4 times higher than BNB with $50 billion. Data shows a consolidated third place for BNB Chain with $5.5 billion in TVL, which is more than double Avalanche, Avax and Polygon, Matic. Binance leads in trading volumes when accounting for the BNB valuation, especially in comparison to smart contract blockchains. There needs to be a different methodology because the token has additional utility on the Binance exchange. Furthermore, providing discounted trading fees, opportunities at the token sales launchpad and exclusive staking opportunities allow BNB to stand out among its competitors. Data from SimilarWeb shows Binance had 300 million website visitors in 30 days versus 121 million from Coinbase. Consequently, if FTX token, FTT holds a $5 billion market cap, BNB should be 5 times larger solely from Binance's utility offer. Therefore, when making a valuation comparison with smart contract platforms, analysts should discount nearly half of BNB $50 billion market cap for an equivalent metric. BNB token seems fairly priced due to its third place. When stablecoins are removed in global market capitalization ranking, its leadership in DApps users, third place status in terms of TVL deposits and absolute dominance of exchange volumes. The crypto market is unpredictable. The volumes are quite small and great attention is needed. Currently, 135,000 bitcoins will enter the market from MT, GUX, and volatility will increase. Moreover, in the entire history of Bitcoin, the month of September was a red one. Having said that, leave a like if you like this video and a comment with your opinion about what is happening in the cryptocurrency market. Until next time, I wish you much success.